purchase of business by a partner with illustration. The adjustments to be made on the purchase of a business by a partner. Sometimes one of the partners agrees to take over the entire business either on the basis of the balance sheet as already prepared or is subject to readjustment in the values of some of the assets and liabilities and agreeing to pay for goodwill to the old firm as may be mutually agreed upon. In the first case, the capital account of the partner taking over the business would be debited with the book values of the assets taken over, the respective asset accounts being credited. In regard to the liabilities taken over, the respective liability accounts would be debited and purchasing partner's capital account would be credited. If any readjustment in the values of some of the assets or liabilities is agreed upon, such adjustments would be debited or credited to a profit and loss adjustment account, which in its turn would be closed by the capital accounts of all the partners, including the purchasing partner, in their profit sharing proportions. After such adjustment, the accounts of the various assets and liabilities would be transferred to the capital account of purchasing partner as indicated above. On the goodwill of the firm being valued, the goodwill account would be debited and the capital account of each partner would be credited with his respective profit sharing proportion. The purchasing partner's capital account would then be debited with the total value of the goodwill of the firm and goodwill account would be credited. On the purchasing partner bringing in cash to pay off the other partner's bank account would be debited and his capital account would be credited. The capital account of each outgoing partner who is paid off would then be debited and bank account credited. All accounts of the firm would thus be closed. Illustration. The balance sheet of Messrs. JBR on 31st December showed as follows. Liabilities. Trade creditors 14,000. Capital accounts of J 25,150, B 20,000, R 17,000. Total capital 62,150. Total liabilities 76,150. And on the asset side, freehold property 30,000, plant 10,000, furniture and fixtures 1,000, stock in trade 18,000, sundry debtors 12,500, less reserve for doubtful debts 200, net 12,300, cash at bank 4,800, cash in hand 50, total cash 4,850 and total assets 76,150. Now, B agrees to take over the business. J and R are retiring. All the assets and liabilities are to be taken over at the book figures, but the goodwill of the firm is to be valued at 15,000 and B had to bring in sufficient cash to pay off J and R. The partners use it to share profits in the proportions 2/5, 2/5 and 1/5. Show the journal entries necessary to give effect to this and the capital accounts of J, B and R. Solution. Let us pass the journal entries. Goodwill account debtor 15,000, to J's capital account 6,000, to B's capital account 6,000, to R's capital account 3,000, being the goodwill raised in the firm's books and its distribution among the partners in their profit sharing ratio. Entry number 2. B's capital account debtor 91,350, to freehold property 30,000, to plant 10,000, to furniture and fixtures 1,000, to stock in trade 18,000, to sundry debtors 12,500, to cash at bank 4,800, to cash in hand 50 rupees, to goodwill account 15,000, being the assets of the firm including goodwill taken over by B. Entry number 3. Trade creditors debtor 14,000, reserve for doubtful debts account 200, to B's capital account 14,200, being the liabilities of the firm taken over by B. Bank account debtor 51,150 to B's capital account 51,150 being the cash brought in by B. J's capital account debtor 31,150, R's capital account debtor 20,000 to bank 51,150. J's capital account by balance brought forward 25,150, 2/5 share of goodwill 6,000, total 31,150 is being paid to him through bank to bank 31,150 and J's account is closed. B's capital account by balance brought forward 20,000, 2/5 share of goodwill 6,000, sundry liabilities 14,200, bank account 51,150. 2. Sundry assets taken over 91,350 by B's capital account by B. Now finally R's capital account by balance brought forward 17,000, 1/5 share of goodwill 3,000, total 20,000 paid to him through bank to bank 20,000 and R's capital account is now closed. In the next lecture, we will discuss about the dissolution of partnership.